All right. Well, I want to welcome everybody to the National Black MBA Association. Um, we're one of the largest African American professional organizations in the world with over 20,000 members, over 500 corporate and not for profit members. And we also typically host one of the largest um, career fairs every single year, where it draws between around, let's call it 10 to 12,000 up to 18,000 African American professionals. So last year we had to do that virtually, and this year they're trying to get back to actually meeting in person again. Because also at this event is one of the top recruiting events for diverse talent. So typically 400 of the top Fortune 500 companies attend and have booths here because they go there to find diverse talent, newly minted MBAs, as well as diverse talent for their director and above positions as well. But I want to tell you a little bit more about the National Black MBA. We do programming every single year. So I'm the president of the Cincinnati chapter. And each year we do programming in 5 different pillars, from education, encouraging people to go back, get more education, get their MBAs, career, programming how to move up in your career, leadership, becoming a better leader and leveraging your leadership skills and your innate skills, lifestyle, a variety of events from, pre-COVID, we joined up with Corbeau and did a ski event and some other events as well too. And entrepreneurship, which this program fits into, being the secrets of real estate investing. Now, as I was telling some people that are on, how to invest in real estate investment has been a very popular topic with our members, et cetera, because typically our members have disposable cash. And now, especially with this, time in COVID, is getting a lot of people some time working from home, et cetera, where they're thinking about, what can I do to make my money work for me even more? And so this evening, we have a great list of panelists. We have Kevin Breckenridge of 317 Capital. We have Steve Alexander and Bobby Bean of Winning Team Coaching. And we'll have Marcus Parrish of Keller Williams Advisors Realty. So let me first quickly introduce the panelists. So I'll start with Kevin. Kevin Breckenridge, the founder and CEO of 317 Capital. Kevin is a commercial real estate broker and investor with over 11 years of real estate experience. He helps investors create, grow, and preserve wealth through real estate by providing avenues of growth and exposure via teaching, education, mentoring, advising, consulting, speaking, representing, and creating direct investment opportunities. And Kevin actually gained his first real exposure to real estate investing, working with the City of Cincinnati Mayor's Office as an economic development person on the Banks Project. And now Kevin, he lives and operates in the Washington, D.C. area. All right, let me introduce you to Bobby Bean and Steve Alexander. Bobby has been a loan officer for 14 years, a real estate investor for 21 years, and a real estate agent with Realty Realty for the last 5. Bobby created the Roof Project, which is an ongoing workshop that equipped the underserved, particularly Black women, with the tools and resources they actually own. So with this program, she actually cultivated 24 new homeowners and investors by way of the program, and she has coached hundreds of people to become savvy real estate investors. In March 2021, Bobby with Steve Alexander, with part of the Winning Team Coaching, created another real estate investment coaching program nationally. And Steve Alexander, co-owner of the Winning Team Coaching, has been a real estate broker and owner of Realty Realty for 20 years. He's also the owner of KIP Roofing and Construction Company. Steve purchased his first property over 25 years ago. And now he has a portfolio consisting of well over 40 properties, totaling over $7 million in real estate assets. And our other panelist, Marcus, I don't quite see him on, but Marcus Parrish, he's a real estate advisor. Marcus Parrish is a licensed real estate agent with Keller Williams Advisor Realty. Currently, he's the vice president of the Greater Cincinnati Realtors Association. He has been awarded CABR Circle of Excellence Award 2018, 2019, 2020, and OAR President Sales Club in 2020. So these are our panelists for this evening that will help us get to the secrets of real estate investing. So hopefully we all can get involved in real estate investing and make money. And at the end of the program, I'll let you know how we'll give away 5 shares of RLJ Lodging Trust. So one thing that our board decided to do this year is, in terms of the rewards of what we actually give away, is if we're serious about wealth generation and helping change behaviors, give away stock. And our board decided to give away stock in African-American owned public companies, such as RLJ. So at the end of this event, we'll tell how one winner will receive 5 shares of RLJ Trust. And as we kick off this, what we're going to do round robin is, first, with each of you guys are going to give your top 3 real estate investing secrets. And I'm going to start with you, Kevin. What are your top 3 secrets to real estate investing?
All right, thanks so much, Ben, and for the National Black Association of MBA. I appreciate you all for having me on today. It's such an honor to be invited to actually speak for such a prominent organization, and to be able to sit with veterans of the game like Bobby and Steven. I really appreciate the opportunity. Now, in terms of the top 3 secrets, it's really tough to say what the top 3 are, but I would say that my number one secret is there are no secrets. And I say that jokingly. It's just that we don't know, and we don't have, we typically don't have access, or used to didn't have access to the information. But a lot of times we just don't have people around us to expose us to the different opportunities that exist in real estate. So I would definitely say there are no secrets. You got to be hungry about obtaining the information. And there are a lot of resources today where you can actually go to self-educate yourself. And a lot of the stuff that we'll talk about tonight, there are a lot of organizations, there are a lot of companies, there are a lot of coaches and mentors out there. So definitely take a lifelong learning angle that you take with, continued education and getting your MBA and things like that. Apply that same mindset to education or to real estate and self-educate yourself. Another one I would say is to understand or evaluate what your risk tolerance is. Whenever you're investing, whether it's in real estate, whether it's in stocks, whether it's in bonds, you have to really figure out what you're comfortable with and to what extent you're comfortable with taking a risk. Real estate is all about risk and taking calculated risk. That's one of the beautiful things about real estate, is you can kind of control the risk factor, but nonetheless, there are different levels of risk when it comes to real estate, and you have to really understand where your risk tolerance is and find the avenue that fits within your risk tolerance. And then I would also say, I'd probably say the last one is, I would say visualize. And I say visualize your success because it's a long road. It's a long journey. There are ups and there are downs, definitely, as you're learning the game. But if you can craft a vision for what you want your life to look like and how you want real estate to play a component of that, craft the vision, visualize it, and stay focused on your goals.
Okay, excellent. Now, Steve and Bobby, what are your top 3 secrets to real estate investing?
Yeah, I could go first. Yeah, let's start off. I want to thank you guys for having us. Really appreciate it. I know it's a great organization. We're just happy to be a part of this panel. I could say my first one is just really definitely be willing to learn. I'm gonna piggyback on a lot of stuff Kevin said, but just be willing to learn, educate yourself. And I say, I've been in this game for a while, but stay a student. Never think you know everything. It's so much to learn, and you just have to constantly keep growing. And I always start off, education is always the key. Just educate yourself, seminars, talk to people that's been in the game for a while. Just keep getting education. Don't never get to a point where you think you know everything. And also understand you can learn from everybody. Don't think that just because that person is not excelling in that, there's still some nuggets that you can learn from that person. And you just always want to just constantly stay a sponge and just keep educating yourself.
Excellent.
Number 2 for me is, like I said, you got to be willing to take risks. You have to be willing to take risks. Anything in business is a risk, but you can take calculated risks. Like, real estate is calculated risk, but you got to be willing to take that step and stretch your mind and grow from there. And I can say my last one is be willing to make adjustments, meaning if things doesn't go right, a lot of times people want to blame the industry. It's not the industry, it's what you're doing in the industry. So always be willing to make adjustments. When things is not going right, look in the mirror and say, what did I do wrong in this situation? And be willing to make those adjustments and then just keep growing. So those are my three.
Absolutely.
Okay, Bobby.
Well, hello, everyone. Thank you so much for having me. I'm holding it down for the ladies, y'all. Hey, they say
Definitely.
it's a man's world, but we know the rest. It wouldn't be nothing without a woman's touch. So here we go. All right. So my three, and those were both amazing. And again, this is an honor to be a part of this tonight. So super excited. But my top three would be: numbers don't lie. Men and women lie. Feelings lie. Emotions lie. Numbers don't lie. So keep that in the forefront when you're looking to invest in situations, okay? In real estate, rather. My second one will be always look through two lenses, and that's going to be long-term and short-term. So I would dare to say every single property that exists has either a long-term or a short-term play in it. And the more that you're able to see the long-term and the short-term vision, the more opportunities will be opened up to you. And then last but not least, people respect what you inspect. When this question was posed, I didn't know if it was coming from in terms of a hold type of situation with the real estate investment, so as a landlord, or if it came from fix and flips, but it doesn't really matter. People respect what you inspect. So make sure that when you're going through these projects, you don't just leave things to chance. You don't just leave it to the next person to take care of everything. You have to be present. You have to be involved. You have to be aware of what's going on. You have to stay on top of it so that you can be like water, like Bruce Lee said, so that you can be fluid, because things are going to happen. You never know what's going to come up. So you have to be ready to tackle those things head on. And if you're not present, you can't tackle them. So those are my top three.
Okay, excellent. Now, also, I would like to know, we'll be stepping through a series of questions for the panelists. For those that are on, feel free to enter some of your questions into the chat window, and we'll try to incorporate some of your questions as well, too, to get your needs met. Now, one of the first questions that one of the people had was, how do you get started? What's the first step? And so since we started with Kevin last time, we're going to start with you, Bobby, this time.
Woo!
So how do you get started? What's the first step?
Okay, I'm going to piggyback off of Kevin because it starts with a vision. So in order to obtain that vision, the first thing you have to do, you have to know there are so many ways to invest in real estate, like it's ridiculous. You can come from so many angles, from notes to wholesaling to flips to holds. There's so much to do. So you have to first kind of study that to know what your options are, okay? Then you have to study, you have to evaluate yourself. I think Kevin said evaluate your risk tolerance, so to speak. So you have to evaluate yourself in the sense of, what can I do? What am I able to do by myself? And even if it is, you don't have the credit, you don't have the money, you don't, whatever. If you have that vision, then the rest of it can come. So you have to evaluate yourself and see what it is you can bring to the table so that you know what you're lacking. And then you have to find the pieces that are missing. So you have some pieces that you're going to bring to the table, but then you're able to find the pieces that are missing. And based on what you have accessible to you, you will devise a strategy then that works with one of those different options that you have with regard to investing. So it's kind of like working the puzzle backwards. You have to know what you have and what you have access to know how to move forward, or what play is going to be best for you in that situation. Did that make sense?
Definitely. Kevin, same question to you. How do you get started? What's the first step? And then we'll finish with you, Steve, on this question.
Okay.
Yeah, so again, back to education, educating yourself. So instead of, kind of repeating what Bobby said, I'll give you, a couple of resources. One of the big popular resources, it costs now, it used to be free, but there's a website called Bigger Pockets. And Bigger Pockets is essentially an online community that's been around. It's been growing for the last 10 years, and they provide a ton of information for people who are just getting into the real estate game. It's called biggerpockets.com. I think now they have a free account. They have some paid accounts, depending on what your budget is. it's worth, paying. Again, that's up to you. In this business, one of the things that you are going to have to get comfortable with, as well as get good at, is evaluating when and what you should pay for. There's a lot of good information out there, but there's a lot of information that can cost. So you have to be able to navigate that and make decisions accordingly. Another thing I would say is if you want a good foundational education in real estate, you don't have to get your license, but consider taking the intro to print, and it's a different name across the country, but basically the course that real estate agents have to take in order to get their real estate license. That's a great resource. Usually you can find that class anywhere between $100 to $200, $100 to $250. There are a lot of places where you can actually take it online, a lot of online schools. I know in Ohio, to get your license, you have to go through the local colleges in terms of the coursework, but you can still take the class in a lot of different places and not actually pursue getting your license, but that's an additional option. So those are some educational options for you. One of the classic books to read is Not Think and Grow Rich. That's a great book as well. But Rich Dad, Poor Dad, almost everybody who's in real estate, that's one of the foundational books, at least in the last 15 to 20 years, that really opened up their mind to the possibilities and the game of building wealth, investing in real estate, and things of that nature. So those are a couple great resources for you.
Excellent. Steve, same question to you. How do you get started? What's the first step?
I will say, I just know a lot of education, be willing to take the risk, but I know a lot of people, sometimes you can over-educate yourself at the beginning. I mean, education is a process that never ends, but don't think it has to be a perfect situation to get started. I know a lot of people say, I want to get started in real estate. They need to know this and that. It's always good to educate yourself, but you have to take a chance. You have to get out there and just get out there, and the best education is through experience also. So I just say, educate yourself, do that, but don't just say, I got to learn everything before I take that first step. You want to get out there and you're going to learn. And it's like to connect with people that's in the game. And that's, get a mentor, that's always good to get a mentor, somebody that can show you, but you definitely have to be willing to just step out there and do it, because you're going to learn from that experience. I mean, you don't want to take losses, but those losses really made me stronger. They made me stronger. They made me know that I knew I did something wrong and I'm not going to do it again. So it made me really learn more. So you got to be willing to do that. And it just, when you take those losses, it just makes those victories so much more sweet. So I just say, just get out there and educate yourself. Don't get me wrong, but you have to get out there and take that step and make it happen.
Okay, excellent.
And also too, Ben, figure out which arena you want to do. If you want to, buying homes, fixing flips, wholesale, and then just target that one. Don't be all over the place at the beginning. Focus on one arena, one area, and concentrate on that and do that at the beginning. Don't try to do all aspects at the beginning. It's going to be too much for you.
Excellent, excellent. All right, the next question is, how much money do you need to get started? Okay, we'll start off with you, Steve. So how much money, even by percentage of that you need to get started, and if you want to buy your first building, et cetera, or first rental property?
The beautiful thing about real estate, when people say you can do things with no money down, that is true. Or you can do things with no money, because if you find a good deal and it's worth something, you're going to find people that's going to invest in that deal with you. So that's the main thing. So you got business people that understand business. So if you find that deal, you can actually put the deal together and, make you money just doing that. That's called wholesaling. So depending on what you want to do, you can actually get in it without any money down, but you have to put in work. So you're putting in the work, you finding the properties, and so you can really get in there with no money down. So, but if you want to, it's ways to do it where you can do it with zero.
Okay, Bobby. So how much money do people need to get started?
I concur. There's this thing called OPMs. Y'all probably heard of OPP. This is OPMs.
Other people's money.
Other people's money. So again, if you have the vision and you have the right package put together, or the right opportunity put together, the money will come. That's easy. That's the easy part. So I concur. And then I will give you, though, a general scope as far as, so for example, if you're a first time home buyer, and this is will probably be the only opportunity I have to share this, or we have to share this. One of the strategies we like to teach as a first time home buyer, your first property can be a multi-unit property, which puts you on a path to never have to pay a mortgage again. That's the goal, for your assets to pay for your liabilities and your debts. Okay. So if you have the opportunity to purchase a home, maybe it should be, it can be 1 to 4 units, and you would only have to put about 3.5% down typically on that. If you're VA, you might, if you've got veterans benefits, you're looking at 0 down. If you buy in certain areas, you might be at 0 down. So that's an opportunity there. And then if you are looking to purchase investment property, typically you're looking at 15% for single family residence and 20 to 25% for multifamily residence up to 4 units. So this is just residential, not commercial. But again, nobody said that money had to be yours. So I'm just giving you the outline. Remember OPMs.
All right. And Kevin?
Yeah, absolutely. I would agree with everything they said. The way the real estate game is set up, literally, you could get started with no money. If you have a telephone, you got internet connection, and you know how to do a little bit of research, you can find out who owns a property. You can call them up, you can have a conversation, and you can make them an offer, and you don't have any money in the bank. And that's what Steve was referring to when he was talking about wholesaling. But generally, you know, one of the things I like about tonight is you all are actually giving away some stock. Another thing you could do is you could literally, I think RLJ was trading at under $20. So you can buy some stock and literally become an owner for $15 to $20. And one of the cool things about that is now not only are you an owner, but you also can start to read the annual reports of a real estate investment company and see how this investment company is operating on an annual basis, find out what their investing goals are, some of their investing strategies. And let's say, for example, you were interested in hotels, that can start to educate you and give you some direct experience in hotel ownership. As Bobby had mentioned, you know, there are opportunities where if you're buying as an owner occupant, you can get in for as little as 3.5% down. If you're a VA, or even if you're owner occupant and you're using certain types of loans, there are companies, mortgage companies, that have 100% financing available. So you literally don't have to put any money down. I think the biggest key is adopting an investor's mindset, because you know, when people are typically buying their first home, or they're trying to transition from buying a first home to an investment property, or they're just trying to get into investing in general, they don't actually start to really develop the mindset that's needed. You have to remove the emotions, right? We talked about the numbers. You got to start focusing on the numbers. You have to start focusing on what the strategy is. The strategy may not be initially to have that dream home. The strategy is, as Bobby had mentioned, how can I eliminate this mortgage, or how can I create cash flow? So you really have to start thinking like an investor, and that will help you start to make the decisions and filter out and filter in the information and the strategies and the resources that you need to actually get started. So just to recap, again, there's 100% financing out there. There's 3.5% down payment financing. There's 5%, there's 10%, there's 15%. There's all different types of funding options. And then again, there's options where you don't need any money. The most important thing is to have that investor's mindset, because even your home is an investment if you approach it as such. So I hope that answered that. I hope that answered the question.
Definitely, definitely. The next question that people had is, how do you evaluate the price for a property? How do you determine if there's going to be a financial return for what you want to do with it? And we'll start with you, Kevin.
Yep. So there are a couple ways to evaluate the price of a property. You could have an independent appraisal done. You could have a broker give you what's called a CMA. a comparative market analysis or a BPO, a broker price opinion. As an investor, especially if you're just learning, it is definitely ideal to have somebody who can help you evaluate what a property may be worth. Because when we talk about the math and we talk about the investing, that is one of the most critical pieces, is to know how much to buy that property for and how much will that property potentially sell for or even appreciate. But in general, you have that resale value that's going to come from, again, you could have an independent appraiser. You could do it yourself by running your own comps and doing your own comp analysis. You can have an agent or a broker assist you with that. And then in terms of, you asked about determining if there will be a financial return, that literally comes down to the income and the expenses of the property. So let's say, for example, if you're flipping the property, you have to literally create a budget, and that budget is going to be, okay, how much do we think we can sell this property for? And then how much do we expect in terms of expenses are going to have to go into this property? And once you calculate your expenses, your income is going to be what that resale value is. And then based on that income and those projected expenses, that tells you whether or not there's going to be a financial return or potential financial return on investment.
Okay. Next, same question to Bobby. How do you evaluate the price of a property and determine if it's going to be a return?
Okay, you have to. So depending on what you're doing, you're gonna have to take your, so for example, with the flip, you're working with your after repair value. So I'll tackle the flip and you can tackle the, you're working with after repair value, okay? So your after repair value is going to be determined. So the way that a property's value is determined is by how much other properties are selling in that area. So I think it's very important to note this. You may have a property that's in a neighborhood of $100,000 properties, and you might dump 100,000 in that property. And guess what? You just lost 100,000 because that property is still only worth its neighbor, which is 100,000. So one common mistake that new investors make is we over improve. We put too much money in the property and we can't get it back. So that's something that I want you all to hear right now. Don't over improve. So it's not the love you put in or the money you put in. The money you put in does not match the value dollar for dollar. So a house property value is determined by what other properties are selling for around it within a mile radius, and the appraiser is going to stick as tight as they can. So they're going to start at a quarter mile and they will only go out further if they have to. And it has to be similar properties. So a 3-bedroom, 2-bath compares to a 3-bedroom, 2-bath, brick to brick, so forth and so on. Okay, so once you determine what the after repair value can be, okay, then you have to take the after repair value minus the purchase price and the repair cost. And if that value does not exceed 70%, if the purchase price and the repair cost does not exceed 70% of that after repair value, then you have a deal.
Excellent. So some numbers for the audience.
Numbers. Numbers don't lie, y'all.
All right. And Steve, same questions. How do you evaluate the price for property and determine if you're going to be a financial return?
Hey, between Bobby and Kevin, I don't got too much to say. That was good stuff. You know, just to really define the value, like he said, you can either get a hire appraiser, and they're gonna come out there and do what she says. You know, the best comp is the one that's the closest to it in a similar situation. You can do that, or you can get a real estate professional, and they basically, it's called a CMA, comparative market analysis, and we'll go out and we'll pull up comps. We pretty much do the same, but the appraiser go more in depth with it. And so we'd come up with a value. And I could talk about, like, if you own a home, and I just talked about investment, like Kevin mentioned, owning a home can be investment too. So if you own that home and houses are selling, like now, I mean, especially in the city, you got a lot of values that's jumping. So if you bought your property for 100,000 and houses similar around your property is selling for 200,000, you actually have $100,000 in equity in your property. So we're talking about, so that could be the short term or long term. I know she talked about the investment, but like I said, your home can be an investment too. So if you see stuff that's selling, right? So if you see property selling for a high value, actually, you know, that makes you have equity into your property, and you can pull that out. And sometimes people pull that equity out and buy properties with it and keep flipping that money. So I just wanted to talk about that aspect of it.
Okay. Now, another thing moving on to the next question involves the price. What multiple do you use to evaluate a rental property value? Is there a certain like multiple times the rents is bringing in? And for this one, we'll start with you, Steve.
Oh, for the for the rental properties, what I use this per door. I evaluate, I say, $200 a door. And so if it's a 4-unit, and that's minimum. So that's pretty much my formula with that. I just base it on that number. If I can get $200 a door, so if it's a 4-unit, if I'm making $800 minimum, that's a good number for me. That's how I know it's an actual formula, but that's usually my formula for it, just per number, per door. If I can get that per unit, I'm okay.
Okay. Same question to you, Steve. What multiple do you use to evaluate a rental property value?
Yeah, I think it's talking about me. So
I'm sorry, Kevin.
it's all right.
I know he ain't talking about me. No.
Rental properties are interesting. There are a lot of different, back of the napkin calculations that people may use. I think ultimately it comes down to what your return goals are. And then there's a difference between the size of the property and in terms of determining the value of it. So for example, if it's 2 to 4 units, that market value is going to be determined based on the sales comps around the property. It's not income driven as opposed to commercial rental property, multifamily. If it's 5 units or above, that's based on the net operating income and what the cap rate is for the market in that immediate area. So it's the market value is calculated totally different from residential and commercial. Now, in terms of evaluating the overall rental property value, that's pretty standard in terms of what the net operating income is, and dividing that by your cap rate or your market value, and that'll give you your cap rate. But you have to figure out what the cap rate is in the general market. You would get that information generally. You can get it from marketing packages, from other multifamily properties that are for sale or recently sold. But generally that's information in terms of the cap rate that you're going to get from a commercial broker or from a source of information that supplies market data for that particular area, that particular location. So that's more in terms of evaluating the specific property. And then again, if it's 2 to 4 units, that's where we go back to that sales comp analysis, and we're checking sales of other properties in the area that are similar in fashion.
Okay. And the same question to you, Bobby, to finish it off.
I'm sorry, go ahead.
No, I was going to say, same question. What multiple do you use to evaluate a rental property value?
I'm going to put it simple because both of them gave amazing answers. If it makes dollars, it makes sense. Yeah. And that's it. You can simply take the gross rents. You can use the gross rents. Okay, so if you've got 4 units and they make $400 a month, then you've got $1,600 a month coming in. You take that by 12, that's your gross rent. Then you deduct out all of those, out of all of your expenses that will come out of that. If you got profit at the end of that, and it's enough profit for you to take on that risk, it's enough profit to pay off one of your debts, be it a car note or insurance or whatever, then if it makes dollars, it makes sense. It can be that simple.
Yep.
Excellent, excellent.
And Ben, I just want to say a couple other, just 2 more things. One, what Bobby was finishing with is, every investor has different goals. So one investor may say, I need a 25% rate of return. Another investor may say, I need a 4% rate of return. Or, I'm trying to cover this expense, or I'm trying to cover that expense. So again, knowing what your goals are and what you're trying to achieve will help you evaluate different rental properties. But another thing I was going to say is when you are evaluating rental properties, some things to look for, and this is in terms of, let's say you're looking to buy, is the property yielding the market rent that is consistent with the market rent of today? A lot of times landlords, property owners, they're either not raising their rents on an annual basis, and they haven't raised their rents in a long time, or they simply aren't really familiar with how to do a rent comp analysis or really do some research to figure out if the unit is getting market value. In addition to, is it getting market value? Could you get a higher monthly rent if you were to make a few modifications or improvements to the unit itself? When you talk about rentals, and especially commercial, the value of the property can significantly be improved by literally managing those expenses and increasing the overall income of the property, as well as or decreasing the expenses. So you want to make sure that that unit is renting for market value in terms of what it could get in today's market, not what it was able to get, 3 or 5 years ago when the tenant initially signed their first lease.
Excellent, excellent. Okay. Now, next question that we had is a recommended turnaround time for those that are doing flips, a recommended turnaround time between acquiring a property and actually selling a property. And so we'll kick that off. We'll start off with you, Bobby.
As soon as possible.
I had a feeling that was coming, but could you try to get some targets that you may try to, but when you try to get in the property, like if it's going to be a flip, like, okay.
Okay. For every $10,000 of work, the ideal situation is that every $10,000 worth of work takes a week. So $100,000 rehab ideally should take 10 weeks. Okay. That's in a perfect world where everything goes right and nothing unexpected happens, and that does not exist. So you want to cushion that. But as a general rule of thumb, that's what you're looking at as far as how long a flip would take. And then you want to sell it as soon as possible, because you've got holding costs that still continue to incur even when the property is done and while you're working on the property and you're not making income off of it. So your goal is to get that property off as quickly as possible, or at least have it in a situation where it's making money, be it Airbnb or whatever, until you can relinquish it.
Excellent. Kevin, same question to you.
Yep. So I would say, Bobby, I wish that rule was hard and fast.
Me too.
I wish it was, because I wouldn't have so many stories to tell. But oh man, I tell you, 1 week for every 10K. I got that one. That'd
be awesome, right? Perfect world.
Yeah, in a very, very perfect world. But so she talked about flipping. I'll try to talk from a different angle. As far as flipping, though, it definitely depends on the scope of work and how extensive the scope of work. But at the end of the day, absolutely as soon as possible, because markets change, they shift. And the market we have literally today could be different in 3 months or in 6 months. From another standpoint, let's say you're investing in, I'm more in the multifamily space now in terms of my expertise, so I'll kind of lean back on that. But generally speaking, let's say you're more into income property, and right now multifamily is extremely hot. There's a lot of capital flowing into multifamily. So if you've owned a property for a long period of time and you've been kind of riding that appreciation wave, you want to consider, and you plan to sell or even refinance, you want to consider where we are in the market. So right now is a great time to sell, or it's a great time to refinance, because the market values are so high. And it's the same with single family. If you own a single family rental, you may want to sell that. So just knowing where we are in the cycle, that can influence whether or not you want to sell, depending on what type of property it is and what type of deductions you're getting. So for example, your depreciation expense, if you've held that property for in excess of 30 years, you may not be getting the same depreciation expense on that property. And it may make sense for you to sell it so that you can acquire another property and begin to take some of that depreciation expense. So there are different, depending on the type of investment and the investment strategy, there could be differences on when is a good time to sell.
Okay, and same question to you, Steve.
Like they both said, immediately is the best way. But I'm gonna piggyback on that. Like the investment, like Bobby was mentioning, like Kevin said, is when you're doing flips, it's really that scope of work. And what you really got to focus on, let me give you an example. Like windows can be, so you got to know when to order certain things, because like lumber can be, lumber's going up, windows, you think they can be in 2 weeks, but a lot of those companies, they're three months out. So you just want to make sure you get a jump on stuff that's going to, even appliances, even ordering appliances, those can be, a couple of weeks out, just trying to get them. So you got to know the market and what's going on, when to, maybe at one point you can order stuff at a certain time and it can be done in a week. But you like right now with windows and certain things, and there's a lot of people that's busy. So you got to know when to order stuff so you can keep your project going at the correct time, so you can hit those time frames, so you can try to do the 10,000 per week. But there's a lot of things that happen, but there's a lot of things that you can control, especially with that scope of work, when to order stuff, when to get people in there to keep the whole thing flowing. So the goal is immediately, and the thing is to try to counteract things that can slow your project up, to have a foresight of what's going on in the industry, what can slow it up, and try to, get those things going beforehand so you can get a jump start on that.
Okay.
I'm sorry. I just wanted to say one more thing. We didn't touch a lot on, I think one part of the question was when to acquire. Definitely be mindful of where we are in the cycle and in relation to, how many projects you may take on, or the scope of work that you take on in terms of that project. Because again, I'm not in Cincinnati, but I can just, from a general standpoint across the country, especially in residential, we're literally, the market hasn't been this strong in 10, 15 plus years in some places. And I think because of COVID, it's going to remain that way at least for another year, potentially 2. But once things start to open back up and the supply and demand evens out, and that's assuming nothing else happens, right? I think the market will be strong. But just keep in mind, when you're acquiring, if you're acquiring now, you're acquiring at a higher price, and you have a little bit more risk in terms of, the market turning on you while you have that project. So that's where the coaching comes in. The mentors who know the market and things like that can come in handy in helping you, evaluate and understand all of that.
Okay.
Let me piggyback on that too. I know a lot of people, I've been in this real estate for a while, used to get properties for 10 to 20,000. Those days are over with. So like Kevin said, the number is going up. So you're looking for maybe 70, 80, and those are good numbers. You don't have to, buy for a higher amount, but your profit still can be there.
Okay. One question that came in from the chat window is, what is a good source to find multifamily deals?
Yep.
And we'll start with you, Bobby.
A good source to find multifamily deals would be, so you have the MLS, okay? That's the standard, or the one that everybody uses. That's your Zillow is attached to that. Everything gets fed by the MLS. However, the market is so, this is a seller's market, which means that the supply is not meeting the demand. There's way more buyers than there are sellers, way more buyers than houses. So it's very, very hard to get any deals off of the market now because of that. The sellers just don't have to play ball. Matter of fact, I'll say probably 95% of the houses that you see on the market now are selling for more than asking. So they listing them for 100,000, they're selling for 130, 150,000, literally. Okay, so the way that you get deals on any house, be it a multifamily or anything else, is that you have to put it out there, put yourself out there as someone who buys multifamily houses. I buy multifamily houses, I buy houses, whatever the case, single family, any kind of house. You have to put yourself out there, and hopefully you will have a deal come by way of a cousin, an auntie. Unfortunately, you can find deals by way of death. People are inheriting properties that they don't want, don't see value in them. We see the value in them, right? So those are where you get your deals. They're going to come from people, not necessarily this market. They're going to come from you putting yourself out there. You can look for people who are in distress, like as far as taxes being owed and things of that nature. You can do sheriff sales and things of that nature. But again, it's just a big competition. So the more you put yourself out there as someone who is buying these types of properties, whatever that property may be, then you'll start getting that direct line to the deals.
Okay. Same question you, Kevin. What is a good source to find multifamily deals?
Yeah, so couple layers with that question. One, it depends on where you are, and I say that because, like for example, Cincinnati is a very unique place in terms of the amount of multifamily properties that it has, especially in the 2 to 4 unit space. That's not a very common thing as you travel the country. So in Cincinnati, you have a much stronger presence of multifamily units. So you're going to have more opportunity. Now, again, it is a seller's market, inventory is tight, but you're going to have a higher level of inventory in the MLS in an area like Cincinnati, simply because there's so much more stock of multifamily. That's in the 2 to 4 unit space. So one, you want to get on Redfin. You want to get on Zillow. You want to get on Truly. I think Truly is still around. That will allow you to have access to the 2 to 4 units that are hitting the market. And that's with another agent. An agent is representing the seller. A broker is representing the seller. Sometimes they list 5 and plus units on Redfin and Zillow. But for the commercial space, the number one site nationally is usually LoopNet. LoopNet, although with LoopNet, they list commercial properties on there. The commercial space, a lot of properties are sold off market. So you'll find deals on there, but you won't find a lot. The biggest thing with commercial is finding and connecting with brokers, the commercial brokers, and you can literally search an entire list of brokers in your area or any area you want around the country by going to LoopNet. They have an area that says find a broker, and you can type in what type of property you're looking for and what location. And then to piggyback off of what Bobby said, one, real estate is a people business. So you're going to have to connect with people constantly and build your network. You're going to build your network of residential agents and brokers, build your network of commercial agents and brokers. There are what's called wholesalers. We talked earlier about wholesaling. There are people who literally run businesses and all they focus on is finding off-market opportunities and connecting those off-market opportunities to investors. And a lot of times they're primarily looking for single-family properties, but they come across multifamily properties that they're looking for investors to sell those properties to. So I definitely would say building your network. Also, there are a lot of local investment clubs like the REIA. They have clubs all over the country. And actually the REIA is actually headquartered out of Ohio. Connect with the local investment groups, expand your network, and you'll start to get an influx of deal opportunities coming by text, coming by email, etc.
Excellent. And I believe Steve.
Great. Just piggyback on what they said. Definitely connecting with a real estate professional that's in that field, that's in the multifamilies. That's a great way to do it.
Which they don't pay for.
Huh?
Which they don't pay for.
Yeah, which they don't. Okay, yeah. All right, you got it.
I'm sorry, the buyer. I just wanted to make sure y'all know the buyer does not pay for the real estate agent. So there's no reason that a buyer shouldn't have representation. My bad. Sorry, babe.
Yeah, so this, like she said, definitely want to connect with an agent or a broker. And also, too, another good way is connect with property managers. Property managers is actually managing a lot of people's portfolios. And a lot of times when people get to a certain point, they want to sell off that portfolio, cash it out, and, just and retire and be done with that. So just staying in contact with a property manager, because usually when that property manager has connections, when that seller is ready to sell, that property manager is usually the one who's going to handle that sale. So stay in contact with them, and you'd be surprised because when they're ready to unload, they sell their whole portfolio off. And if you built a relationship with them, they would, let you know what's happening. You can actually buy a portfolio or a couple of properties in that. So that's always a good way. And like they said, it's all about building relationships. So don't think it's just going to happen overnight. But once you build those relationships with those property managers and those real estate agents, they will start sending you good deals and all of that. So I just wanted to add, really, those property managers is also a good avenue to find multifamily.
Okay. Now, as we get close to trying to wrap up, I'm just going to ask each one more question, and then we're going to allow you guys to give some closing remarks. So one question is, how do you evaluate a potential partner to work with in real estate? And so we'll just have one of you guys answer that. Kevin, that one will go to you.
Yeah, I would say one way, and this is after learning, after learning, I'll tell you, I think one of the best filters is if you can find somebody that has a reputation, a public facing face. Like I said, there are a lot of investment groups. And one of the beautiful things about these investment groups are people are coming together, they're building relationships, they're meeting on a frequent basis, and it gives you an opportunity to get to know people a little bit deeper. Going into an investment is just like going into a marriage. It's a partnership, and it's somebody that ultimately you want to be able to trust, and you have to be able to trust. That's definitely one of the most important, if not the number one decision factor, is can I trust this person? And by trusting them, that involves you getting to know them, getting to build a relationship with them, getting to build a friendship with them in some form or fashion. Another method I would say is, again, there are a lot of coaches out there. There are a lot of mentorship programs. Be careful. Definitely be careful joining. But if you're in Cincinnati, you've got a connection like Bobby and Steve, you can connect with, who have the experience, who have a system, who have a model, and who are open and passionate about giving back, about teaching, and about showing you how to do things and how to do things the right way. So just a couple pointers.
Okay, Steve, this question to you. How do you identify up and coming real estate markets?
How do you identify up and coming real estate markets? It's just really just staying on it. I mean, it's always good to be connected with a real estate professional. What we do, we follow the market. We watching the sales, we watching the trends, we watching all of that stuff. And then when you see that market, you see these values start to jump, and you say, okay, that's a great area. It's kind of like stocks. You say, look, you can see it moving. You just get a good feel of it. And then once it starts jumping, you definitely want to jump in there with it, because like I say, real estate is like a ball that rolls, and you don't want to go against it. You want to just stay with it where it's rolling. So if you see that those values jumping and you see people making money there, that's an up and coming market, and you want to find a way to be a part of that.
Okay. Now this question to you, Bobby. Some of our members are looking to maybe purchase their first investment property, maybe a 2 to 4 unit. Their question is, since the market is so hot, should they wait a little bit for a market pullback before they get in or not?
No. No, and let me tell you why. I had people who were qualified, I'm gonna just say this, like at 120,000, like 8 months ago. And we were actually going out and I was showing them really nice houses. 8 months later, nothing. You can't find anything. So we can't operate on the ifs, ands, and maybes, because the market may not return. Cincinnati is being looked at as a destination city. They want people to come here, and they are trying to move us to a New York and a California. So I would not bank on the property going backwards. And I think people are comparing this market to the market crash in 2008, which it is absolutely nothing like. It's not the same at all. Values aren't being inflated because people are making up numbers. Values are being inflated because people are willing to pay for that, because it's not enough houses there. So there's not a reason for the market to go backwards. So if you're ready to do it, just find the right opportunity in the market that we are in. And then if it goes down, then find another opportunity in that market, but jump on it.
Okay, excellent. And now we'll start wrapping up the program. So each of you guys can take up to a minute. I just want to give you guys give some closing remarks, and we'll start with you, Steve.
I just want to say, like I say, I appreciate you guys having us. And this real estate, I've been doing this real estate for over 25 years, and it's a great industry and it works. And like I always say, you want to educate yourself. You want to take the risk. You just got to be willing to make adjustments. You just want to always, like I said earlier, you just want to look in the mirror. If stuff doesn't work, you want to just keep going. Circle yourself around people that's winning in the industry, and just do it. Because, and there's so many different aspects of it. I mean, if you want to buy and hold, you want to wholesale, you want to flip or get into like what Kevin is into, multi-units. It's just so many aspects on the commercial end. So it's just this, but just take your time on that. Focus on one thing at a time. Don't be all over the place. Focus on one aspect of it, grow that, and then go to the next one. Don't try to do them all at the same time, because that can be frustrating, and you don't want to frustrate yourself, but you just want to learn one aspect and then go to the next one. And then now you're involved in a lot of things. And so you can build a multi portfolio within the real estate industry. So you got industry, you got holds, you got fix and flips, you wholesaling, you in multifamilies. So now you got all of that in your portfolio. So you got a diverse portfolio of real estate at your disposal. So I just say, just do it. It's exciting. Appreciate you guys for having us on this call. And I just say, just do it. That's my main thing. I love real estate, and I'm all about it.
Excellent. Kevin, closing remarks.
Yeah, thanks again, Ben, for having me. I really appreciate the opportunity to talk real estate, to talk wealth, to talk investing. I am extremely passionate about doing what I can to raise the consciousness within our community, because as we know, historically and statistically, we tend to fall behind in a lot of areas, and especially when it comes to money and it comes to wealth. But I think there's a wave of consciousness going on within our community where we are really taking a step forward and demanding defining and demanding and going after what we want, especially when it comes to economic independence, financial independence, and wealth. And I think now is a great time. If you haven't gotten started, it's a great time for you to get started. Stay portfolio minded. You're building a portfolio. So yes, you can invest in stocks, you can invest in Bitcoin, but the real wealth is in the land and in land ownership. And you have the ability to build wealth and achieve financial freedom and economic independence that will allow you to be able to take care of your family today as well as in the future. And this is knowledge that no one can take from you, right? Like I remember when I graduated from college, my uncle was like, man, you did it. That's knowledge. That's something that they can never take away. It's the same way with real estate investing. It's a lifetime journey. It's a life skill. And it's one that really can empower you on a lot of different areas. So I'll just finish with this. Be patient. Be patient and don't quit. All right, be patient and don't quit. And yes, you probably are going to lose some money, but that's all a part of the game. As Steve said, it's going to make you stronger. It's going to make you better. And remember, it's a lifelong journey. So be patient and don't quit.
Okay. And Bobby, closing remarks.
All right. First and foremost, thank you so much for allowing me to be here. My passion is my people. You can follow my track record. My passion is my people. That's where my heart is. And so it's an honor and a privilege to be here. Somebody on this line, and I don't know, because y'all, my eyes work horrible. My eyes don't work. But I saw somebody say at the beginning, is it too early for me to start? I'm 15 years old. I want that person to be given my phone number directly, 513-373-5688, and I want that person to call me. No, it's not too soon for you to start. You might need some help in starting, but this is what's going to change the trajectory of our community. We make up 44% of the population in Cincinnati and only own 14% of the land. That has to change, and it changes. It starts with that 15-year-old that said, is it too soon for me to start? No, it is not. So you're gonna need some help, and we're gonna find some ways, and we're gonna start getting creative. Like instead of giving the colleges our money for a dorm. We're going to start putting our babies in multifamily residence and making them manage that property and start getting them some assets under their belt instead of keep feeding UC and Xavier and that UC whoop. I'm a Bearcat, but still, we need that money back. Anywho, so my closing remark, I want that person to call me, and I'm serious. And it's for us to work together to keep putting together these programs. Thank you so much for this opportunity to keep educating each other. And everybody that was on this line and learned anything today, take that information and give it to somebody else. And that's how we're going to break this curse in Black America. And we're going to change that trajectory, and we're going to start owning the land instead of gleaning in it, because we were never meant to glean in this land. We're meant to own this land.
Well, and one thing I want to do as part of close out, because those that want to go further, I believe you guys, Steve and Bob, I believe you have a coaching program. Could you share a little about your coaching program?
We do.
And how they could take any next steps of the coaching program?
It's winningteamcoach.com. winningteamcoach.com. It's got all of the information in there. It breaks down. It's a 10-week course, and it breaks everything down, starting with the mindset, and works you through the process. And then, of course, with our experience, our collective efforts, our collective experience, we will continue to mentor our students through the actual process of, if it's purchasing a flip, if it is purchasing a rental, whatever it is that they want to do, we're there to coach them through that. But this is a program designed to get you moving. It's not one that gets you to buy something else so you can continue. It's not that type of thing. So you get everything that you need in that 10 weeks to really know how to move forward, from contracts to the releases you should have when you have contractors doing work, attorney in, from everything. So definitely check us out, winningteamcoach.com. And we are here to be a blessing, because we have been blessed. And look, y'all, I started when I was 25. I didn't have a mentor. I ain't know nothing. And I was just too much of a fool to be afraid. And I jumped out there and I made it. It was fine. I learned a lot of ways not to do something, but I made money still. And now I know what to do.
Ben, let me add to that though. So everything Bobby said, like, we just been in this for so long. And I say one of my biggest things is, in the real estate industry, I done made a couple of people millionaires.
Yeah.
And now to be able to put it on paper and come up with a course to be able to do that and show people start to finish how to invest in real estate and be real about the whole thing. That was just a passion of ours, and to be able to put it together with Winning Team Coaches. That's what it's all about, because it's all about the people. What we've been blessed, and it's a blessing to be a blessing.
Absolutely.
Excellent. And Kevin, I thought you have some training as well too. How can they get a hold of you for your training program?
Yeah, absolutely. I got a ton of stuff going on. I just try to give out the information as best I can. And I have a community that I'm building online called the Multifamily Investors Collective. I also have a 10-week program that I run sometimes throughout the year that teaches you a lot about acquisitions and evaluating real estate and things like that. But I have a ton of stuff online. So you can go to Kevin S as in Sam Breckenridge.com. You can easily find me on Instagram. You can find me on LinkedIn. You can find me on Facebook. You can find me on Twitter. I'm on all the social media platforms. You can find me on YouTube. And again, I have an online Facebook community called the Multifamily Investors Collective. So I do a lot of stuff throughout the month. I bring in a lot of speakers, and I'm really building out a community of investors, of like-minded individuals who essentially, want to do what we're doing here, to invest in real estate, raise the consciousness, and most importantly, give back, whatever it is that they learn and whatever it is that they have accomplished, so that we can increase the impact and the effectiveness.
Excellent, excellent. So I know people got a lot. I've seen the comments. I have like a page of notes that I've taken myself. I want to thank you guys. Thank you, Kevin. Thank you, Steve and Bobby, for sharing your knowledge with the attendees. And I hope all the attendees take advantage of reaching out to you guys and taking your courses and learning more and building their own wealth. And now I'll wrap out this program. So we'll be sending out an overall survey for the program. So for those that take the survey and respond, we'll select the winner of the RLJ Lodging Trust stock. because as I mentioned, we're all about building wealth and helping other people build wealth by getting involved in the stock market, getting involved in real estate, as well as even investing in yourself. And that's part of all what the National Black MBA Association is about. So we talk about career programs, leadership, entrepreneurship, whatever it is that you want to do as African-American professional, but building that and building wealth for you and your family. And so for those of you that are not members or what we call future members, always feel free to go to cincyblackmba.com or go to nationalblackmba.org, NBMBAA.org. To find out more about the National Black MBA Association and even join. And along those lines, I want to thank everybody for attending and wish everybody a great evening. Bye.
Right.
Thank you so much. Y'all be blessed.
All right.
Okay.